This is answers to frequently asked questions about the tax-free cash growth warehouse strategy, brought to you by SCFSIC.
This frequently asked question is, what are PUAs? PUA is a rider that stands for paid up additions. This is a general term, and various providers have other acronyms for the same basic thing as well. Paid up additions, or PUA, refers to the purchase of an additional block of whole life insurance that is added to your policy and is paid in full at the time of payment of that premium. PUAs carry a couple of highly valuable benefits. One is that additional life insurance is added to your policy with no addition to your regular scheduled minimum premium. The other benefit is that about 98% of what is paid for the PUA is added to your cash value. For example, let's say you have a policy with $100,000 of whole life and your minimum scheduled premium is $200 a month. Then you add a one-time PUA of $1,000, and that buys you an additional $5,000 of whole life benefit. Now you have $105,000 of whole life, but your minimum premium is still $200. It hasn't changed. But now you also have about $980 of the $1,000 you paid for that additional insurance benefit in your cash value that you can leverage. Pretty amazing, really. Please subscribe to this channel and you'll be notified as we add more facts, answers, and other content. And if you haven't yet, do yourself a favor and click the link below in the description box and watch the TFCGW webinar, Become Master of Your Financial World.